Hey everybody, it's Pete. Good morning. It is the first Stocks for Breakfast for 2021. Welcome. Thank you so much for being here with me today. What I'd first like to ask you to do is please contribute. If you have any questions, please leave a comment below. A question obviously related to the video that we're watching right now. We're going to start out today with questions from the community, the really good questions over the long weekend, and conversations started about day trading versus swing trading. And I want to talk about this because it's my personal background. I started out first as a day trader and migrated into both doing day trading and swing trading. But I want to make this clear. I've been doing this for 20 years. So I have a little bit of experience of understanding how to do both. And that's what I want to challenge you on right now. I want you to really think about, do you have the time to be a day trader? Do you have the time to sit in front of the screen and locked in there for that period of the most volatility, which I'm going to tell you straight up as a day trader is the first 2 hours of the day, maybe even the first 90 minutes of the day, and the last 2 hours of the day. If you are day trading right now on your lunch break, you're actually getting in there and day trading at the worst time of the day, where 9 out of 10 times, that's when everybody's out. There's nothing going on, and maybe there's algorithms going back and forth making a market, but there's not that much going on generally. Again, don't write in the comments, I found one day where it exploded. That's fine. One day. We're looking to trade the 9 out of 10 times when something happens. So I just want to throw that out there. If you're trying to day trade on your lunch break, that's going to be very challenging. Okay. Now, what I want to do is I want to answer some questions from the community about the difference between day trading and swing trading and the ups and downs versus swing trading. And I'm actually going to start out with probably the biggest one, the strongest question that we have here. And I think this is more a function. It's more a function of the market, stimulus packages, quantitative easing, and that kind of stuff. But before I get to the question, I want to start out with saying something. Before I get to the questions, there's no other way to say it because I want to make sure I make the point and don't go off on a tangent, which my mind can go crazy sometimes. If you're finding it that you're struggling where you think you might be picking good ideas and it's bouncing in your favor, and then you get kind of getting stopped out and it's doing exactly what you thought it was going to do, generally speaking, and I see this with a lot of newer members in the community, and I preach this over and over and over again to not do what they're doing, which is to trade the market leaders. If you are trading stocks that were $2 yesterday, exploded to 14, and think that you're going to get regular, consistent price action out of that, you're wrong. You're wrong. Unless it's in a market that has the market attention, unless the smart money has consistently over time been opening near the low, closing near the high from weeks to days to months, it's going to be hard to get reliable follow through. A lot of newer members into the boot camp are chasing these scanners and chasing these penny stocks and chasing stocks that you probably never heard of before, expecting to get reliable follow through, when really all they're doing is finding one day that the stock was in play, putting a trade on, and then getting stopped out because it's all over the place because it doesn't have consistent smart money attention. Again, what is the smart money? We're asked all that time. Smart money is the order flow. Smart money is the powers that be, somebody with deep pockets. It could be one person, it could be 10 different groups looking and focusing on the same set of stocks, the same industry, the same sector, and pushing that stock around. It makes a stock move from 50 to 100, or in the opposite direction where it goes from 100, like with OSTK, 120 down to 60, right? They push the order flow down in the other direction. It's orders coming in, right? So that's number one. Number one is if you're finding yourself getting bounced around where the upside potential of those trades, you love the upside, you love the fact that it's a $12 or a $15 stock, and now you're going to jump in. You're not getting follow through because it's not a market stock. I'm just straight up telling you, whether you're day trading or swing trading, it doesn't make a difference. I'm doing this a long time. Every single one of the professional traders that I've been with, including myself, trade market stocks. We don't go looking for stocks you've never heard of. And now I'm talking about day trading and swing trading. I'm not talking about growth investing. I'm not talking about value investing. I'm talking, we think it's going up over the next 2 to 10 days. And now, when I say that window, that means that you need to have a profit target. That means that if you have 20 or 30% on a stock over a 3 or 4 day period, at some point you have to say, this is ridiculous to make this kind of return in 3 or 4 days. And you have to take it and then go look for the next trade. So there's been conversations about moving your stop up to break even, moving a trailing stop up, having a profitable trade at the end of the day, and only seeing to that profit disappear the next day. I'm just going to straight up say it. There's no other way to put it, which is why we need to have more of these conversations. That doesn't happen in good ideas. That doesn't happen when the market has good attention on it. That doesn't happen when you're in the right stocks with order flow. That doesn't happen when you time your entries better. I try and encourage as much as possible when we're in the boot camp, especially when we're in our game plan meetings every day at 8:30. They're predominantly devoted to swing trading. And a lot of the ideas are good from a technical perspective, meaning they match the criteria for order flow. They're kind of close to our optimal entry point, which I'll touch on that in a second. But the stock is out of nowhere. Like it looks good from a tape reading perspective, that and order flow is obvious, but so many times I've never heard of the stock before, and it's not in any industry that is in play or normal or like something you would ever think about. Oh yeah, I know that stock. And I'm not saying you only need to trade GE, or like I'm exaggerating, or even Tesla or something like that. But the market needs to have attention. There needs to be attention on the stock for a little bit longer period of time. If you are trading a stock that has only had the market's attention for a very short period of time, you're going to get stopped out. You're absolutely going to put a trade on. It might move in your favor as the next day of a little bit of an echo from the previous day. But there hasn't been consistent buying in that stock. There hasn't been consistent attention. That's going to be challenging. You are going to get stopped out on those more often than not. That's why every single trading book that you could possibly read, every one of them, every single one of them, everyone that's on that shelf says find the strongest sectors, the strongest industry groups, and trade the leading stocks in those groups. That's the first piece of experience I want to start this year out with. So if you find yourself getting stopped out, especially on swing trades. Number two, I want to start out with this one because it's kind of a pet peeve of mine right now. I sent a few emails out with trading plans and that kind of stuff over the weekend. But I firmly believe right now that some people have an incredibly irrational view of trading right now. And in one sense, a part of the email I sent out is that this is a glorious time to be a trader. The last 9 months of the year, and let's even put September in there and October when it was a little bit tougher, there was still plenty of opportunity if you dove down into the industry groups that were hot at that moment, that were on fire, such as the solar stocks, which were strong, such as the energy stocks there for a while, right? Is this theory that 20% somehow is not enough in one day. I can't, 20% in one day, people are happy if they get that in a year. They should be, matter of fact, they should be ecstatic that you get that in a year, 20%. So I would never, ever say to squelch having massive goals, squelch having big dreams and want to accomplish amazing things. I'm the leader of that. So, as a matter of fact, sometimes that's my fault that I think too big, and I don't see the downside sometimes, and that kind of stuff. However, I realized I was trying to find the next 20% in a day stock. That's a quote from one of the members of our community and a couple of other people agreeing with that. That's unrealistic. You should not be looking for the 20% stock. You should be looking for the stock that is in play, that the industry has attention, that you're getting near the optimal entry, and it follows through. And I'm going to give you a baseball analogy. Don't worry if you don't understand baseball. You'll understand it relatively quickly. When I played baseball, the single biggest thing was you just wanted to make solid contact. And if you did everything right, every once in a while, some of them would go. Some of them, you'd get under it just enough, and that same exact swing that you'd try and hit a single, the same exact swing would be a home run because it just followed through in a particular way. Trading's the same way. We have no idea which one's going to be the next 20% move. Like, for example, the QS trade that we had just about a couple of weeks ago was a perfect setup, pulled back, a lot of attention on the industry at that particular moment. And then the stock doubled in 5 days. Doubled in 5 days. Now that wasn't a harder trade. It wasn't hard to find. It wasn't. As a matter of fact, it was our what is becoming our favorite entry signal right now. But we weren't looking for a stock that would double. We'd look for a stock that had the next potential to move quickly in our favor, which kind of brings me to the next thing. It's very easy to identify a stop loss for a swing trade specifically. The profit target side of a trade, you need to have some idea what is an acceptable profit. Now, generally speaking, there's the time tested 3-to-1 reward potential, but for some reason now these days 3-to-1 is not enough because of the percentage moves. And I'm seeing unrealistic expectations of what trading is, where everybody's looking for a home run, and that also sets you up for big losses on the other side. And I've seen some people that happened to Tesla in the middle of the year, like I said, after August, September and October, and even into a part of November, where Tesla went from ridiculously bullish in the context of the market to trading sideways, and people still aggressively trading Tesla, looking for those monster gains when the stock clearly didn't have obvious order flow and the tape was a mess. So really the whole point that I want to get across here, don't day trade part-time. That's really the number one thing I can get across. And when I say part-time, if you can be in there the first 90 minutes of the day, that's fine, because you did your game planning, you went into the day and you're kind of ready for it. That's the most clean type of volatility and volume. You can prepare for that time of day. If you did a game plan and then you're logging in at 11:30 and you're firing off questions in the community about trade ideas that are all just kind of like slowing down now, and the morning meat is off the bone, that's going to be very challenging and you're going to be frustrated. Then the last 2 hours a day. Now, the last couple of months, the afternoons have been very stock specific. The market really hasn't picked a direction. We've been getting these bullish moves on the open and kind of floating sideways. But again, digging deeper into having your list of stocks, I'm telling you, I'm challenging you. It doesn't matter if it's day trading or swing trading. Have those sector and industry specific lists. Every Sunday, I prepare one for everybody in the boot camp, and I sorted out by a big list of stocks that have certain criteria over the last quarter and the last month. You could drill down into those, but then I challenge everybody to take it deeper with another sector list where it's sectors for the prior week, and then go into those scans and find sector specific stocks that are strong now. So I guess what I want to get across here is day trading and swing trading, very different businesses. You need to have the right stocks, and we talk about it all the time, the optimal entry. I see this quite a bit, again, with newer members coming into the community, where they love the idea, but they catch the idea 4 days or 3 days after it's already spiked. That's going to be hard because, again, if this is the acceptable profit potential and you're getting involved here, you're now turning yourself into a break-even trader on that trade, and you have a lot less wiggle room to turn that into a profitable position. Optimal entry is another thing. Next part is trade management. Day trading is rather easy because day trading, there's this sense of instant gratification where if it moves in your favor, you're going to be right or wrong quickly, and generally speaking quickly, and it's easier to manage, and it moves. And we have these very defined parameters for day trading in the boot camp, where this is absolutely the first profit target that you should accept in exchange for putting that risk on. And then we have another one that's based on the day, and another one that's based on, three more that are based on trailing stops, right, after it moves in a particular favor. Swing trading is a little different. I'm going to read a couple of here. Getting stopped out too many times after I move my stop up to break even on swing traders. I'm trying to swing trade and oftentimes find myself getting stopped out. And the last part is, what I don't like is to see my P&L at the high at the end of the day and overnight only to see it go down the next day. So trade management on swing trades is a little bit different. But again, I want to get back to the core of this message, whether you're day trading or swing trading. We made an argument about, one or the other. And day trading is you have to be in there at certain times. Swing trading, you have to be able to accept that overnight risk. But there seems to be a theme now about getting stopped out on good ideas. And it really comes down to this. I don't give a crap about which stocks I get stopped out on. All I care about is at the end of the month, did I make money? So here's a realistic view of whether it's day trading or swing trading. Now, First, I want to step back. I want to basically say that you can absolutely work on your management skills, your trade management skills. I never would say that you shouldn't. However, um, if I end the month hitting my goal and I traded well that month, I don't care which trades made money versus which trades lost money. I don't micromanage. If I did what I was supposed to do, if I entered at the optimal entry, moved in my favor a certain amount, had my profit target and moved up my trailing stop, so the worst case scenario is a break even and I get stopped out on that, that's what I was supposed to do. That's a part of managing the trade. That's a part of being a trader. I don't care. For some reason, especially for newer traders, and even a little bit for some experienced members that have been in the community, they go crazy over trades that don't work out instead of focusing on the ones that do. That's real trading. Real trading is you put on trades, you do what you said you were going to do, and the ones that are supposed to follow through, the better ideas that have smart money, the better ideas where you read the good tape, those are the ones that don't come back. So I'm just going to straight up challenge you to find better ideas. I'm going to straight up challenge you to say, are you getting involved at the optimal entry? Are you finding stocks that nobody's ever heard of and expecting to get follow through? So the next part is I'm going to challenge you again, it's the first trading day of the year, is you need to set profit targets. You have to have an idea of what a profitable trade looks like when you put that trade on. And it kind of reverse engineering it. If you're taking a certain amount of risk, you need to understand what is a respectable or acceptable profit in exchange for the risk you're about to take. But again, I can't stress this enough. Is it annoying to take a loss? Sure. But we're talking about getting stopped out for zero loss. Think about that. We're talking about you did a good job of putting the trade on. It moved in your favor a certain distance, not up to your profit target. You put your stop at break even and you got stopped out. You're not even taking a loss on the trade. Think about that. Especially in today's commission-free environment, you're learning how to trade, you're gaining the experience of finding good ideas, but there's a deeper level to go into some of those ideas that are better ideas that don't come back. So there's two different things at play here. Number one is stop being frustrated about stocks that don't do exactly what you thought they should do. Number two is to understand what your profit potential is on those trades. If those trades follow through and hit your target, at some point you have to be either, and I do this a lot during the day and I get questioned on it. It's because trading for a living is different from trading and having another full-time job. It's real money. When stuff moves in my favor, and everybody in the community can attest to this, if stuff moves in my favor and I have a pretty decent profit on the trade, I'm the first person in there saying I'm scaling out of some of this because I want to take some of this home. I am not necessarily looking to aggressively keep piling into a trade. If I hit my target, that was the point of the trade. If I was looking to risk $3 to make $9 and I'm up $8.50, I'm gonna make sure I walk away with some of that. That's real trading. That's if you, and again, a lot of people are aspiring to do this for a living. Real trading is you have to respect the fact that it's real money. We're not looking to catch the bottom and catch the top. A lot of people that have full-time jobs, which there's nothing wrong with that. As a matter of fact, I encourage it while you're learning, if you are still employed and have a really good income. It's easier. I just want to get this straight out. It is easier to hold your positions up and down and through all the fluctuations when that's not how you're earning a living. I just can't stress it any other way. You're not relying on that money. A professional trader is relying on that money, and you go deeper to find the better ideas. You go deeper into yourself and say, okay, I've reached my profit target. I'm going to take some of this off the table. I understand the desire to want to add to positions, and we talk about that quite a bit, adding to positions. But adding to positions at what point based on what the stock normally does, adding the right shares. So here's another thing too. If you put a trade on here and you add up here for a swing trade, and specifically, it really comes down to you should never be risking the same amount on your second entry. This second entry should always have less shares. So even if you're losing on that second piece, it's a lot less P&L that's going down because you already have the bulk of the shares at your initial entry price. So really, it comes down to time frames. It comes down to time that you can put in front of the screen, and it comes down to realistic expectations. And I talk about this quite a bit in the boot camp, where 20% in one day is now not enough, or that's the goal. And I'm telling you straight up, That's bananas. That's bananas. You should be looking for account growth, reliable account growth, not looking for the next 20% move that's going to move in one day. That's just not realistic. It's not, it happens once in a while, but that's not how you're going to make your living. So again, it's the first day of the year. I'm going to challenge you to find better ideas. I'm going to challenge you to participate and just really think about where you've been finding your ideas. Are you scanning super deep into news outlets that nobody's heard of, or that kind of stuff, and finding stocks that nobody's ever heard of? Those are not the stocks you want to swing trade. You want to swing trade stocks that have the market's attention on a regular basis so that you get follow through. And you can look at stocks where you look at it and you're like, wow, the stock didn't move for 4 weeks. And then you see it pop out for one day and you got involved. You're like, I don't understand why I got stopped out. But you look to the left and you see the stock normally doesn't move. That's what I'm going to challenge you on now. I know there was a lot. I didn't plan on covering that much, but I'm going to challenge you. I want to challenge you to go deeper if you're not getting the results that you wanted in 2021. I'm going to challenge you to find better ideas. I'm going to challenge you to find better entries, which I call the optimal entry. I'm going to challenge you to set a profit target before you put the trade on, and then stick to it. And stop complaining about getting stopped out at break even. You just put a trade on and got in and out at the same price. You didn't even take a loss. Don't sweat those. The right trades will follow through. If you take 10 trades, 5 of them stop you off a break even, 2 of them lose money, and the other 3 you get paid, that's the recipe. That's real math. That's the real math. All right. Have a great day.